Hello, this is the Tradeside U.S. Stocks and Futures Market Preview for the week beginning Sunday the 22nd of September 2024, ending Friday the 27th. We just completed triple expiration for options and futures for the quarter. So we've got until December before that happens again, and that's fine. Wasn't a very exciting session, obviously, on Friday, and it usually is not when you've got the expiration going on. Here's a look at the dollar index. And again, not much this last week. It's still mid-range for the last year. Euro dollar a little higher than the middle of the range for the last year. Usually the inverse of the dollar index, but it's been doing better. Pound dollar is looking strong, but we have a 12 count now. So one more day up, and we'll have a 13 sell signal on the pound dollar. The ES front month futures contract basically almost came to new highs here. Stock market's at all-time highs as the economy remains fairly strong. S&P cash did make new highs this year. So again, and then with the interest rate cut that we saw this last week, obviously a positive for the markets in general, positive for everything. And the market didn't seem to panic that the Fed was worried about doing a half point instead of a quarter point. So soft landing looks like it's in place at this point. NASDAQ 100, not new highs, but up for the week, obviously. The Russell 2000, not quite new highs, but almost there. And this should be helped by the lowering of the interest rates. Crude oil, on the other hand, back down. And it's down at 64 at one point, sitting at 71 to close out the week. Here's Bitcoin sitting at 53,669 and still trading as it always does. So down, still has never made new highs since the 13 sell signal back in April. TLT, the 20-year bond ETF, was down this week, which is interesting. But obviously, the market's factored in the rate cuts that were coming, or at least the first rate cut. And that's why we were, bonds up, rates down, as they say. And we had been up for a while here. But, if we're going to get a total of 1.5 points of rate cuts, which is what they're kind of thinking over time here, then over the next 6 months, then it'll probably continue higher. The VIX closes at 16.15 after the big spike a month ago. Advanced decline ratio on the New York, both ways most of the week, but mostly positive until Friday, and then a little bit negativity, but again, that's just a pullback. The trend closes at 1.09, puts the 10-day moving average at 1.09, well above the 0.85, which is the blue line, which is the level we like to watch for issues. Here's the week on the ES. So you can see the prior Friday, and then this is 10-minute candles, and then Monday just dead flat, Tuesday gap up, closed flat, Wednesday flat until the Fed, and still basically closed flat. So at that point, we're even for the week. Then on Thursday, a big gap up. Tried to go higher, closed inside the opening 5-minute candle, so that's not very exciting. Friday, little gap down and closed inside the opening 5-minute candle. So not the most exciting week in the markets. Obviously, from an investing perspective, it was good. Here's the NASDAQ, and it is what it is. NASDAQ volume, on the other hand, solidly over 5 billion shares almost every day of the week. So that's a positive in that perspective. Let's look at their big stocks. Apple, daily chart, approaching the highs, could break out here. Amazon also approaching the highs. Meta at new highs. Google, not so much there yet, but could get there pretty soon. Goldman Sachs, not far away. Netflix swept new highs this week at one point in time. Tesla coming back up for highs for the last 6 months. NVIDIA, not much here. Zoom had pulled back a bit. Didn't do much this weekend. First Solar up a little bit for the week. So that is where we're at. Markets remain strong. There's nothing to be concerned about at the moment. And you're heading into that time of year where, things could go awry, but they're going to have to start soon or they won't. That's just the reality. And you probably bounce back by November. In terms of economic data coming out this week, we've got here in the U.S., nothing on Monday, really, that matters. A bunch of Fed members speaking. Tuesday, we've got the S&P Housing Price Index at 9 a.m. Eastern Time. We got consumer confidence at 10. We've got the Richmond Manufacturing Index at 10. And then Wednesday, new home sales at 10. Crude oil inventories at 10:30. Another Fed member speaking. I mean, really light action for the week. Then Thursday, though, is probably the biggest day for U.S. data. So we've got the final GDP renewal or revision for the second quarter. There we go. And more Fed members speaking, including Chairman Powell himself at 9:20 a.m. We've got the pending home sales number at 10. I mean, geez, all the Fed members, like 6 of them are speaking on that day. Natty gas at 10:30. Treasury Secretary Yellen speaks at 11:15. More Fed members speaking at 1. I mean, that's just a lot. And then on Friday, we've got the core PCE price index, goods trades balance, personal income and spending, preliminary wholesale inventories. That's all at 8:30 a.m. Eastern Time. Revised University of Michigan sentiment at 10. And we're starting to see, at least in New Zealand, the daylight savings time shifts. Remember, we're still here in the U.S. We're still a couple of. It's the beginning of November anymore, right? So it's a couple of weeks away still before we see that here. What it does, though, is it offsets. It makes it weird for the markets, and just things get a little bit strange for a little bit, just because you've got nothing in sync. They change everything being off an hour. Most of Europe goes on the 26th of October. Here in the U.S., it'll be hold on. Here in the U.S., it'll be November 3rd. So just keep that in mind. So we're only 6 months away. 6 weeks away. Sorry. Not the end of the world. Charts as usual brought to you by NinjaTrader. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week.